Welcome to This Week on Wall Street, your essential briefing into what matters most in markets. I'm Matt Weinschenk. I'm the Director of Research here at Stansberry Research. And yes, we've got to talk about tariffs again, but this week the news is good. And stick around because I'll give you a stock to look at if this trend towards lower tariffs continues. So, this week on Wall Street, markets ripped higher. On Monday, President Trump announced he would pause that huge 34% tariff on China and only use the smaller 10% tariff. He also made a deal with the United Kingdom, and we don't have all the details yet. And with China, it's only a 90-day pause, but this news has been enough to send markets higher. We're up more than 4% as we head into the weekend. But the one strange thing about this market is that it's an everything rally, right? A couple weeks ago, I talked about how emotions drive markets, but usually emotions work differently when prices go down versus when they go up. When everyone gets scared, they just decide to sell everything. They don't have time to think about it. They just want to get out fast. But when the market rises, investors are usually a little more picky. The market rise tends to make a bit more logical sense. People panic sell, but they usually don't panic buy. So you typically see differences in how stock or sectors perform on the way up. But not in this rally. This is about as close to panic buying as I've ever seen. Investors have bought everything right back to where it was. The sectors that fell the most during the downturn have jumped right back up, putting us back where we started. And our deeper studies of market correlation confirm this too. I'll spare you the statistics here, but you can sign up at stansberrydigest.com if you want to see those. Now, usually, you can watch a market rebound for clues about what investors feel good about or what might lead the market going forward. But in this rally, investors just want to buy everything. And that's weird because tariffs may look a lot lower than on Liberation Day, but shouldn't things be a little different? Shouldn't we see something different happening with industrial stocks or manufacturing or retail? Isn't the whole point of tariffs to reshape the economy? You should also be careful because even though the market is back where it was, the economy looks very different than it did in February. Earnings expectations for the S&P 500 have shrunk. The forecast for both 2025 and 2026 have been dropping since early January. Now, that's because consumers and businesses sound really negative when they answer surveys. Sentiment is terrible, and many people think there's a good chance we'll have a recession soon. Now, maybe with those lower tariffs, those estimates have gotten too low and they'll start to be raised, or maybe companies will just beat expectations. But all this really comes down to the consumer. We've talked a lot about this on this show. And while people say they feel bad, we haven't actually seen them stop spending. On Thursday morning, new numbers came in on retail sales, and they were up just a tiny bit from last month. It wasn't a great number, but it was better than economists predicted and still doesn't show the big drop that many fear. So to me, this quick rally looks a little overheated, but let's look out a little further ahead, and I've got a stock for you to check out. Now, if you think we'll keep seeing lower tariffs, and if you think that will cheer up not just markets, but shoppers too, take a look at Five Below. So this is a low-cost store that sells toys for kids. They try to keep everything under $5, so that's where the name comes from. Their whole business is built on bringing in cheap toys from China and selling them here. Now, for years, the stock did really well. Each store itself has very good economics, and they were growing their store count quickly. But worries about tariffs and consumer spending have pulled shares down. However, they're still opening new stores, and if tariffs stay low and shoppers start spending, this stock could really jump. It's already reacting to the tariff news and hitting a 5-month high. Looking forward, the company plans to simplify what they sell and focus on giving a better value proposition to its customers. Now, sometimes, during tough times like recessions, these cheap stores like dollar stores and Walmart and Five Below actually do pretty well as people trade down to cheaper options. Right now, Five Below rates as a B in our Stansberry Score, but we're very picky here at Stansberry Research. B-rated stocks tend to do quite well, and in fact, that puts it in the top third of all stocks worldwide. So, if the macroeconomic news goes in its favor, this stock will have a big reaction. You can learn more about the Stansberry Score and check out your favorite stocks at Stansberry Research, where we provide tons of free, high-quality research on the deeper dynamics moving the market and the stocks that will benefit. You should go to sign up for free right now at stansberrydigest.com. And, of course, hit like and subscribe here on YouTube so you never miss our market insights. That's all for today, and I'll be back next week.